Hey there, financial navigators. Welcome back to the channel where we dive deep into the fascinating world of market mechanics, uncovering unique opportunities and explaining complex concepts in plain language. Today, we're zooming in on a specific stock that has triggered our hard-to-borrow screener with some truly eye-popping cost-to-borrow fees. We're talking about JEM, or 707 Cayman Holdings Limited. Stick around as we break down why this apparel retailer is causing a stir among short sellers and what it could mean for its stock. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. JEM chart. Alright, let's get into it. Our focus today is 707 Cayman Holdings Limited, trading under the ticker JEM. This company operates in the consumer cyclical sector, specifically apparel retail, selling and distributing fashion apparel products like denim, athleisure, and outerwear across Hong Kong, Europe, North America, and beyond. With a modest market cap of just $4.01 million, JEM is a relatively small player, but it's making big waves on our hard-to-borrow list. Looking at the recent price action, JEM has been a roller coaster. Today alone, it's down 28.35%. However, zoom out a bit and you see a different story. The stock is up 23.66% over the last 5 days, and a significant 66.67% over the last 30 days. Show volume. Bars volume has also been far from typical. Today's volume clocked in an astonishing 50,016,300 shares, which is nearly double its 30-day average volume of 8,087,346 shares, giving us a relative volume of 1.9x. What is cost to borrow and why it matters? So, what does it mean for a stock like JEM to be hard to borrow, and why should you care? At its core, cost to borrow, or CTB, is the annualized fee that short sellers must pay to borrow shares of a stock before they can sell them. When a stock becomes hard to borrow, it means there's high demand from short sellers who want to bet against the company, but very limited supply of shares available to lend. This scarcity drives up the CTB fee, often to incredibly high percentages, sometimes far exceeding 100% annually, because these fees are typically compounded daily. For short sellers, these high fees can quickly eat into their potential profits, and even turn a winning trade into a losing one if they hold their position for too long. It's a direct measure of the pain short sellers are feeling, or could soon feel. Why this stock is hard to borrow right now. Now let's talk specifics for 707 Cayman Holdings. JEM appeared on our hard-to-borrow screener for some truly remarkable reasons. The current cost-to-borrow fee for JEM stands at a staggering 895.4% annualized. Let that sink in. And it's not just high, it's dynamic. Over the last 5 trading days, JEM CTB momentum has surged by an incredible plus 795 percentage points. This indicates a rapidly intensifying demand to short the stock, coupled with an equally rapid shrinking supply. To put it in perspective, there are currently only about 95,000 shares of JEM available to borrow. While JEM's exact estimated float is currently unknown, the extremely low number of shares available to borrow, just 95,000, is a strong indicator of tight supply relative to demand. Our internal composite squeeze score for JEM, which factors in CTB, momentum, borrow supply, float, and technicals, currently sits at 43.5 out of 100. While not the highest score we see, it's definitely enough to register on our radar as a stock with noteworthy short interest dynamics. Squeeze mechanics explained. This brings us to the concept of a short squeeze. Imagine short sellers are betting JEM stock price will fall. To do this, they borrow shares and sell them, hoping to buy them back later at a low price and return them to the lender, profiting from the difference. But if the stock price starts to rise, especially unexpectedly, these short sellers begin to lose money. When the cost to borrow becomes prohibitively expensive, or when their losses mount, they can be forced to cover their positions. To cover, they must buy back the shares they borrowed, regardless of the price. If many short sellers are forced to cover simultaneously, this sudden rush of buying demand can rapidly push the stock price even higher, creating a vicious cycle known as a short squeeze. For JEM, with its tiny float, an extreme CTB, and only 95,000 shares available, any significant upward price action could ignite such a scenario as shorts scramble to find shares to close their positions. Dilution risk check. Before getting too excited, it's crucial to check for dilution risk. Dilution happens when a company issues new shares, increasing the total number of outstanding shares. This floods the market with more supply, which can effectively offset or even negate any buying pressure from a short squeeze, driving the price down. Our check for JEM 707 Cayman Holdings Limited shows no recent dilutive SEC filings like INS-1, INS-3, or 424B in the last 90 days. Furthermore, we haven't found any recent reverse splits for JEM in our look-back window, which can sometimes precede or be part of dilutive activities. So, as of now, dilution does not appear to be an immediate concern for JEM's short squeeze thesis, which is a positive sign for potential squeeze mechanics. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you watch for with JEM? Firstly, continue to monitor that cost to borrow rate and the number of shares available to borrow. Any further increases in CTB or a shrinking supply of those 95,000 shares could tighten the news for short sellers. Secondly, keep an eye on volume and price action. Today's minus 28.35% drop shows extreme volatility, but the overall 30-day positive trend suggests there's underlying interest. Look for significant buying volume accompanied by upward price momentum that pushes through resistance levels. It's important to remember that a high cost to borrow does not guarantee a squeeze. It can also mean that short sellers have very strong conviction in their bearish thesis and are willing to pay exorbitant fees to maintain their positions, believing JEM stock will eventually fall significantly. Always consider the fundamentals and the broader market context for 707 Cayman Holdings. 707 Cayman Holdings Limited, or JEM, with its annualized cost to borrow of 895.4% and extremely limited shares available for borrow, certainly presents an interesting case study for hard-to-borrow stocks. While the dynamics are compelling, remember this is an educational exploration into market mechanics, not a guarantee of future price movements. Stay informed, do your own due diligence, and understand the risks involved with highly volatile stocks like JEM. If you found this breakdown insightful, please hit that like button, subscribe for more unique market insights, and let us know in the comments what other hard-to-borrow stocks you'd like us to cover. We love hearing from you. Thanks for watching, and we'll see you in the next one.